something that was on here
You
that,
want to go to the prior slide, or?
yeah, go back to the,
This one, or?
yes, the basis of the tax rate doesn't necessarily, tell the whole story with respect to each community.
Okay.
Because it's got to do with, the number, you know, whether it's on a per person or per household basis. It has to do with the assessed value of the property. And it also has to do historically with where the levy limits was set back when Prop 2.5 was originally placed. I was wondering if you had looked at any of that in your analysis.
I hadn't looked at the relativity. I think what you're driving at, Bob, correct me if I'm wrong, is sort of the comparability of assessments across communities, and that I'm not aware of an effective manner in which to do that. So in other words, the rate itself is what's published by the state and is what's used as the basis of taxing by each of the individual communities, and that's what's reflected there. The rate is also, you know, I believe is also an accurate measure of the relative tax burden comparison with the overall value of any individual property. I think, though I could be wrong, so I'll qualify this. I think if you actually looked at North Reading's average assessment relative to that tax rate, we would actually be driven even higher relative to the overall peer group, because our residential rate, our average assessment for the residential rate, to which a very high residential rate is applied, I believe is actually higher than average, but I would qualify that, so I don't want to represent that as a fact.
Okay. Anybody else have any questions for Mike?
No. I just, I guess I'm looking to have you define greater equity. I guess when I think of equity, it's like, you know, if I own a piece of commercial property or I own a residential property and I have same assessed value. What do you mean by equity, I guess?
I mean by equity relative to this slide, Steve, to say,
Oh.
I believe the proper, or at least for me, what I would say the appropriate definition of equity is how is a residential taxpayer, you know, handled relative to surrounding communities, and how is a commercial taxpayer handled relative to surrounding communities. I personally don't believe it's, you know, within North Reading residential taxpayers to commercial taxpayers, because one is not going to become the other. You look and say, how are people handled relative to essentially the alternatives in the immediate geographical vicinity.
Okay.
So that focuses on the fact that we're, again, the fourth highest in the residential rate and the fifth lowest in the commercial rate.
Okay, so you're talking about equity in relation to other communities, not within the community.
Yes, relative to other communities, not within the community.
Okay.
Which is, right.
There's a question from Jeff Yule.
If North Reading commercial rate would raise to, is it $800?
Yes.
That would put them at the same level as Orlando.
Actually,
$14.38.
correct.
Okay,
Would be slightly above, it would be between North Andover and below Danvers.
Okay. So they would move up, and then you indicated that North Reading's residential rate would stay the same, still be, actually, I don't know if he'd still be fifth, fourth on, would it?
That presupposes the successful passage of an override, that would then allow the residential rate to be increased 2.5% and generate the additional $800,000 in revenue. If there's not a successful override, basically there would not be the $800,000 in revenue, and the residential rate would remain the same as it is currently. But my point was, even if the residential rate went up to 2.5%, we would still be the fourth highest within the comparison communities.
So that would still translate into
It would, because the implementation of the tax classification or the decision to split the rates is a decision the Board of Selectmen makes off-cycle relative to the budget. I believe you typically take that up in November, December, is that fair?
Every November.
Every November, I'm sorry. So it's done independent of the budget. The board would have to split the tax rate in November, not knowing whether or not an override would be successful or not. If the override was successful, we would have a 2.5% increase in the residential rate, $800,000 in additional revenue, and if the override were not successful, we would have the same amount of revenue
Mrs. Bailey?
Yes, thank you. I thought I knew my question was now, I'm not so sure after you said that. But basically two questions. One, I would like to know, would the FAC make the same recommendation based on the assumption that an override does not pass? And two, I guess it has to do with the timing issue. Are you suggesting that the selectmen set the tax rate and then in the subsequent year, I'm sorry, that the override passed? No, the selectmen set the tax rate in November, and then in the subsequent year you go for an
Well,
override?
they set the tax rate in November for the coming fiscal year.
For the, well, you did your preliminary tax bill, and then set it for that.
It would be,
That you're in.
that setting would be for this fiscal
For the
year.
fiscal year that
You
you're in.
just make up the last
Right,
two
so-
payments, the difference.
You know, I sort of see a lag there one way or the other, and then from a practical purpose, I guess if the until the selectmen set the tax rate, if an override passes before that, wouldn't that increase in taxes translate across the board equally to a certain, this is really not in head, to a, you know, to a certain cents per thousand increase for all taxpayers? So logistically, I guess I'm really not clear on how that would work to manipulate, you know, the tax rate, and you have to figure out what's the chicken egg thing. You
But
know,
I-
I think the override almost has to come first, because it's set in November for that fiscal year. And then, like I said, so I guess that's kind of a comment or a question about the timing. And then, given today's events, that we have this override huge assumption, would the FAC make the same recommendation if they knew that an override was not?
Well, it's a very interesting proposal. You know, it shows some thinking beyond the normal thought process of, well, let's just, you know, have change the differential tax rate. Okay? You know, with respect to the override side of it, you raise a good question as to, you know, what's the appetite for anyone under the current conditions to approve an override. We could also use the fact that we received $5 million for the Batchelder School project, right, which is applied directly to our debt exposure, and everyone gets a benefit from that automatically, right? Can we go now and ask, well, you were paying this level of tax, so you already voted, you know, you're willing to give that back in an override too? You know, and then we certainly would balance our budget. Just interesting thought.
Actually, if I could direct that question, at least for me personally, I don't want to represent that this is a topic we discussed at the FAC, but for me personally, I would go forward with implementation of this even if an override failed, because again, to the point I made to Mr. O'Leary a minute ago, I look at this as a very inequitable distribution of the current tax burden, whatever size that tax burden is. Again, the implications of an override failing would be no incremental revenue, but it would be relief, some partial relief to residential taxpayers, admittedly funded by commercial taxpayers, which is not easy. But again, I look at it and say, how do we have one group at the fourth highest, basically at the top of the list, and one group at the bottom of the list? And even if we were to do this, they don't come up from the bottom of the list very far. You know, they still stay below 2/3 of the communities that, you know, that arguably they're competitive with in terms of an economic competitiveness perspective.
Any other questions for Mike? Steve?
Yeah. I guess I'd ask you to go back and look at what Mrs. Bailey pointed out, because that's what I was thinking too. In other words, if this is going to be, other than the equity issue in relation to other communities, if you're looking to implement something here which is going to generate some additional money,
Yep.
it has to be tied with an override. And the timing is very important, and I agree that the override would have to come first with a carrot being promised by the board to classify, knowing full well that what's going to happen. Because if we were to do it, say, this year, we say we would classify this year, you know, all you're going to see is a redistribution of the valuation of all the dollars.
Well, I realize this would be my opinion, not yours, and
Yeah.
you're the one who votes on it, but I would say that chart basically actually suggests that a redistribution even today is appropriate.
Again, and again, philosophically, it depends upon what you, again, we can discussed, and we have discussed over the years, whether or not we're talking about an equity issue from within the community rather than comparative purposes to other communities. And, the initial hit to commercial-based property is pretty significant, just because, as you say, it's, 10 or 12% of the tax base.
It absolutely
It's a huge hit, and I forget what it was last year, but, the most we could save if we did a maximum classification was,
Essentially almost 10 to 1.
yeah, well, it was like.
It's about 8.5 to 1, it's 88 to 12.
Yeah, but it was like, $150, $165 we could save the average homeowner, as opposed to the similarly assessed commercial property was gonna go up $1,300.
Correct, so, to be fair though, I think there are some parallels in terms of if you're suggesting this is a plan that creates large impositions on a relatively small number of people, in this case, commercial property owners, I think there's actually a fair amount of parallels with respect to the fees that the school committee has already implemented, which contribute over $500,000 to the budget on which the budget is based. I took that from a comment that you made, which actually also is tailored to a very small relative segment of the population, which is the parents of school-age children. So,
And I think if you look at the other communities, you'll see very similar fee structures in those communities in relation to school athletics and extracurricular activities too. So I mean,
fair enough.
from an equity standpoint, looking at other communities, you're gonna see some very similar situations.
I'd just like to remind the board members that we're not debating.
Yeah, I know, and I don't mean to debate it, I was just,
Yeah, we're
Discussion, yeah.
we're getting facts and ideas and information.
Okay.
Anyone, yes, sir. Identify yourself, because I don't know your name. Yes.
Based on an exchange of a couple of exchanges happening, I got the impression that properties are uniformly assessed at 100% of market value. And I wondered if that's correct or if I misunderstood that one. No, that's not directly accurate.
I mean, my understanding is that, one is that every 3 years we're required to bring all property up to 100% of market value, and each year there are adjustments made as things change. So, ever since Prop 2.5 has come about, there is some level of uniformity, but, whether it's perfect, I would say it isn't perfect.
Locally here, adjustments are made by the assessors on an annual basis so that nobody gets hit. Years ago, it was done once every 3 years, and then all of a sudden, particularly the average home in our community saw a significant increase in assessed valuations and, actually value, true value. And as a result, when they got hit after 3 years, there was a huge, significant jump as far as the shifting of the burden again, so that all of a sudden, someone owned a nice little ranch or a cape, all of a sudden saw their tax bill go up, $1,200. So that's why the assessors here decided to go into an annual review to keep it over, so it's not so dramatic a shift one way or the other.
I appreciate your point. My question was more when they do assess, are they assessing 100% of value?
They tried, yes.
Any other questions? Thank you, Mike.
Okay. The next idea we wanted to run by you is our research that we've done in the health insurance area. And Mr. Delaney is going to give that presentation.
Thanks, Mike. I was assigned the task of looking at health insurance benefits that's offered to town employees. And what I first looked at was if we were to increase copays. Currently, I think most of you here and at home probably are aware, if not, you will be aware that all municipal employees pay a copay of $5 for an office visit, $25 for an emergency room visit. And I should start by thanking Mr. Balakonis and Human Resource Director who's filling in as our recording secretary tonight, Allison Olson. Wealth of information for me that they pulled together. And a significant quote came out of the Massachusetts Interlocal Insurance Association. They are, for those that don't know,